Well, good afternoon, traders, and let's start off what is an epic week when it comes to event risk. Whether you're looking in the US, whether you're looking in the UK, whether you're looking in Europe, whether you're looking here in Australia, or China with their PMI numbers later in the week. There's event risk across all geographies, and there's event risks across economic data, central bank meetings, and also on the political side, where the pound continues to get sold off pretty sharply at the moment. If you have a look at cable today on the open, we've got the market trading 123.64, down 20 pips on the session. The sterling can't find a friend in the market at the moment. I think that's obviously a reflection that Boris Johnson's cabinet is very pro-Brexit. It's obviously been designed, therefore, to give a very strong and powerful message towards the European Union, who really don't want to negotiate on the backstop. And I think the pound just really can't catch a trick. Obviously, we look out later into the week on the Bank of England decision, and at the moment the market's only pricing about a 2% chance that we get a rate cut at this meeting, so it's obviously not going to happen. But I think it will set the scene for a more dovish situation from the Bank of England, with the idea that they need to get in front of the curve ahead of this Brexit situation. So the pound continues to find sellers. It's the dollar which is working reasonably well. I mean, dollar yen 108.57, down 11 pips, but we've got euro dollar holding flat. We've got dollar CAD holding flat on the session. Dollar CNH is up a little bit here, but certainly, obviously, it's about the dollar with the Fed meeting coming through what is effectively 4 o'clock on Thursday morning for us here in Asia, Wednesday night for Americans. But certainly, the market is pricing in one rate cut. We've got about a 17% chance that we get a 50 basis point cut coming through. It looks like 25 is probably the most likely scenario, with a clear open door towards another one back in September. So certainly that's what we're keeping an eye on. We've also got some manufacturing this week. We've got the non-farm payrolls numbers on Friday. So obviously the dollar is in play at the moment, but we do have a little bit of a move in dollar yen to the downside. And I think that's probably a reflection. If we have a look at the equity markets, the Hong Kong market down 1.2%, down 340. Japanese market down a touch at 84. Chinese market's pretty flat on the session. Actually, it's Australia which continues to find buyers. Financials up about 0.9 of 1%. Healthcare working very nicely indeed. Obviously, that's a reflection that we've been having a fairly heavy Australian dollar. But the fact is, if you look at the quote at the moment on the ASX 68.25, we are a smidgen away from the all-time highs of 68.51. The fact that we're so close should, in theory, draw us closer towards that situation, as we do have Rio kicking off earnings season here later in the week on Wednesday. So that's something that we will be watching closely, just how Aussie earnings season makes us tilt towards the all-time highs there. In terms of US, we've talked about what's happening in the Fed and some of the data points, but we continue to watch what's happening between the politics. The debt ceiling continues to inspire to an extent, and that's being US dollar positive. We've also got a situation where the US-China dialogue continues in earnest, although we're not expecting anything too punchy from that rhetoric. And we also focus on what's happening in the US earnings season. So for people who are stock investors, stock traders, do keep your eye midweek. We're going to have Apple coming out with numbers. I think that's probably going to get the lion's share of attention from our client base. Do consider that when it comes to earnings, there is probably not many companies which have a better pedigree at beating on the bottom line or the top line than Apple. They have beaten in all of the last 8 sessions in both of those perspectives. The implied volatility for the stock is over 3%, so we are expecting a fairly punchy move based on the options pricing there. But I expect Apple to really move the dial there in terms of expectations around earnings. But certainly, S&P continues to gravitate and push new all-time highs. The market needs to inspire. The question is, will we get that from the Federal Reserve this week? The way that Asia's sort of trading at the moment, it's not really giving us any clear indications, but it's just some pre-positioning ahead of those situations.